Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. While the markets were already on a back foot on account of the strong dollar index, steadily rising crude prices, and the US 10-year bond yields crossing 4.6% on account of diminishing hopes of an early interest rate cut by the US Fed, it was mainly the rise in geopolitical tension and escalating conflict between Iran and Israel which led to an acceleration of the selling pressure across global equity markets in the week gone by. However, after a gap down on Friday and a retest of 21,770 zone, Nifty swiftly recovered towards the close and ended the day at 22,150 levels on a positive note, ending the week 1.6% negative. BSE mid cap and small cap indices too witnessed cuts of 2.2 and 1% respectively. Apart from keeping a close eye on the ongoing geopolitical developments between Iran and Israel, market participants would closely track the quarterly earning announcements in the coming week by Reliance, Tata Consumer, HUL, Bajaj Fin, Tech Mahindra, HCL Tech and Maruti, apart from the other large cap companies which would be announcing their quarterly numbers. Even HDFC Bank numbers announced during the weekend would be having an impact on Bank Nifty and the overall markets in trade today. Also, key US data points such as Q1's 2024 GDP numbers, core PCE numbers and initial jobless claim numbers scheduled to be announced during the week would be keenly watched by the market participants. While these geopolitical events are leading to excess volatility, there is it's also offering excellent opportunities for investors to add quality stocks at bargain prices. Even history suggests so. We feel traders and investors should prioritize large cap stocks and quality mid caps in the coming few weeks as they offer a better risk reward proposition along with a higher degree of safety in the run up to the general elections. Coming back to Nifty, so if you see Nifty open interest and PCR data, it has improved. If you see the PCR has improved from 0.8 to 0.94 levels on Friday, with strong put writing which is visible in 22,000 strike, and we expect the level of 21,940 21,970 zone to act as a strong support going into the expiry week. On the call side, if you see significant open interest built up is visible in 22,200 22,300 calls, implying that the current rebound rally could head into some potential resistance around the 20-day EMA zone of 22,300 22,340 levels. Crossover about 22,340 will lead to short covering amongst call writers in the 22,200 and 22,300 strike, which could open up the gates for the index towards levels of 22,450 22,500 levels. While on the downside, if the index breaks the level of 21,940, the index could retest its crucial support zone placed at 21,750 21,770 zone, which is also the previous month's swing low. Coming to Bank Nifty, so Bank Nifty PCR has seen a sharp improvement from 0.66 levels to 1, indicating strong put writing towards the end of the trading session on Friday. If we see, significant open interest is visible in 47,500 and 48,000 calls, while put writers were active in 47,500 and 47,000 strike, implying that 46,800 as a key support zone and 48,200 as a strong resistance on the upside. Coming to stocks in focus, counters such as BEL, then we have HAL, Bharti Airtel, Eicher, Escorts, Grasim, HDFC Bank, Hindalco, JSPL, JSW Steel, Mahindra and Mahindra, Maruti and Nalco. These are the counters which are looking good based on technical parameters as well as on the relative strength chart. If you look at the FI long short ratio, if you see for index futures has weakened from 56% to 35%, implying unwinding of long position as well as build up of fresh short positions in the past 1 week, while Nifty has corrected from 22,775 to 21,770 levels. FIs have been on a selling spree in the stock futures segment too. The above data is indicating that market participants are displaying caution, with next week going to be a result heavy week, with the lot of large cap announcing their numbers, and given the way the ongoing geopolitical tension between Iran and Israel is, traders are a bit apprehensive taking leveraged positions. So friends, that's all for today. Thank you for regularly listening to our podcast, and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.